I've made that adjustment. I'll go ahead and click Submit these settings. Now we see that Potash, POT, is at the top of our list. Stock's currently trading for $73.80. I could sell the slightly in the money 65 call for $10.20. This would give me a 13.8% downside protection and a 2.2% if assigned. You see now, since I went ahead and went deeper in the money and collected a higher premium due to the higher intrinsic value, we have a higher downside protection. The stock can drop further before we're technically losing money on the position, but our percent if assigned lowered. We only now have a 2.2% if assigned. But naturally, since we went deeper in the money, we also now have a higher probability, a 78.5% chance that we'll get assigned and earn that 2.2%. Okay? Now, once I've run my search, I can do further detailed research and analysis using the More Information button, the little blue button over on the left-hand side. So if I click that More Information button, I can quickly link to the stock chart. I can look at a one-year snapshot or link to big charts. I can research the company information, look at any recent news, the earnings events, or the profile. I can link to the option chain, and this is a very powerful tool to use on power options when we're researching covered calls. The reason why is because these important factors, such as percent downside protection, percent if assigned, and the percent probability of being assigned in the covered call trade, essentially the risk-reward factors that we want to look at when we're trading a covered call, we show those on power options in the option chain. So let's say I found Potash here in my results. I was afraid that maybe January was too short of a time frame. What I can easily do is click that More Information button and link to option chain. This will take me right to the full chain for Potash. Here I can see that I have the various calls listed for me in the different expiration months. Now for convenience, you see here that the 65 January call that we linked over from, the symbol has been highlighted in red, so we can quickly reference which call that we wanted to sell. Now originally, remember, we had a 13.8% downside protection and a 2.2% return if assigned. Well, if I want to go more at the money because I want to look for a potentially higher return and I'm willing to give up some protection, I might take a look and compare it to the January 70 strike call or the covered call position. It's currently selling for $6.70. Here I have a 9.1% downside protection, so I've lost a fair amount of downside protection, but I have a potential 4.3% return. If I want to be more aggressive, I can go further out of the money. If I'm speculating on the stock and I think Potash is really going to take off, I could sell the January 80 strike call for about $2.15. Now this only gives me a 2.9 downside protection, which means the stock can only fall about 2.9% before I'm technically losing money on the position. But if the stock does move up above 80 in the next 18 days, which is relatively unlikely, I would get an 11.7% return for those 18 days. Okay, that's more speculation. Now, of course, we can compare this. Remember, our in the money position we found that was more conservative because its higher downside protection was 78.5%. Probability of being assigned. Now, when we got closer to at the money, we lost some of the downside protection. Our potential percent return if assigned increased, but our probability of getting that return decreased. So it dropped from 78.5% down to 62.9%. Now, at the same time, if we're speculating, we go deeper out of the money, well, now we only have about a 30.7% chance that the stock would be trading above $80 in the next 18 days, and we'd be able to lock in that 11.7% return. Now, of course, this is not any recommendation or suggestion to go out tomorrow morning, buy Potash, and trade one of these positions. We just want to show you some of the tools. And using the option chain, if you're interested in covered calls, even naked puts, because in naked puts we show you if you link to the put chain from the naked put screen, which works the same way as the covered call search screen we were just on, you'll be able to see there the percentage naked yield for the put position compared with the probability of the stock staying above the put strike price and earning the full return from the premium. Now, of course, one of the other things you can easily do once you've opened the option chain here, if you're doing covered calls, is we saw our January results. We ran some comparisons. We can also compare it now to the other months further out in time. So originally, we linked over because we found the January 65 covered call position on Potash in the Smart Search tool. If we take a look at the February 65 position, we could sell the February position, which is 53 days out on time. My apologies. We could sell the 65 call for about $13.70. This gives us an 18.6% downside protection with a potential return for 8.2% if we're assigned. Okay, but that's over a 53-day period. So what I have selected here for you is you see that if you were assigned in January, you'd only make 2.2% over 18 days, which works out to be a 45% annualized return. That's our percent if assigned annual. So when I want to compare different months, I want to make sure that I have this column selected. Now it's very interesting here because if I sell the February 65 call on Potash and I get assigned at 65, I'd actually have a 56% return. So normally we don't see this. Normally the near month option offers the highest annualized return. But in this case, it might be a better deal for me to go further out in time so I can get the higher annualized return. Then, of course, you can also run your same comparisons to the 70 strike call, which is a 14.6% downside protection with 11.1% return, 77% annualized as well. Now, when you first open the chain, if you do not see a column that you were interested in seeing, and this is the same on the search tool that we were just in, all you have to do is simply click the See More/Less Columns button, and this will take you to a configuration page. And here you see you can pick and choose between a myriad of different options, data fields, the Greeks you can select to view, the implied volatility ranges here as well, the option high, option low, the last price as well. And you just pick and choose, click in the boxes of what you want to see in the configuration page, and then down at the bottom click Save and Return, and the new columns will be added onto your chain. All right, so let's go ahead and go back to the main covered call menu. When you first go into any strategy, you'll see the links for the available tools. We went directly into the search tool for the covered call technique. If you wanted to look at the various returns or monetary values for covered call positions on a stock that you own or you've been tracking, you can use what's called the Quick Find tool for covered calls or link directly to the option chain, which we just saw. Another way that you can link to the option chain is simply by typing in your symbol into the field here up at the top and then click on chain, and that'll take you directly into the 5-strike call and put chain for the particular stock that you're researching. In addition, we can also use the search by symbol tool to find covered calls just one stock at a time. When we first went into the search tool, we pulled up a default search called In the Money. But in the covered call screen, there were also several other default searches that you could use. There's a default At the Money search and a default Out of the Money search. These are not meant to be recommendations or suggestions. The trades that you see that appear from those default searches are not direct suggestions. They're to be used as a stepping stone for you to create your own personal search. In addition to that, in each strategy, we also have a tool here called Sample Searches. And for the covered calls, when we click on that, you see there's a vast array of reports you can use. There's the 7-Eleven report, which is more aggressive, looks for more volatile stocks. Broker Recommended, which is looking for stocks that are part of the S&P 5-star and in an uptrend with high broker recommendations. There's a default covered call screen for ETFs, so if you're interested in doing covered calls on ETFs, you could link right there. Okay, and you also have other lists for 5-star, new stock highs, safety first report, and so on. So you can use these specific tools as a default setting to create your own personal search. Okay, now one of the things that we know about covered calls, let me just go back into the search tool real quick and let's just go ahead and take one of these positions. We saw earlier how on our covered call position, this particular covered call that came up on our default screen, we have an 8.7% downside protection and a 2.2% return if assigned. One of the functions that we can do in the More Information button is look directly at the profit and loss chart. Okay, now here we see the standard profit and loss chart for the covered call position. We can see that we can make a 2.2% return as long as the stock stays above our strike price, in this case the $30 strike price here. We'll make our full profit. What is what are the problems, excuse me, of this type of strategy? Well, an in-the-money covered call gives you decent downside protection. The stock, in this case, we were looking at could fall about 8% before we were losing